Hello and welcome to Fidelity Connects. I'm Glenn Davidson. Today, Fidelity Canada has launched the Global Small Mid Cap Equity Fund. This new product allows investors distinct opportunities across each market spectrum: mid cap, small cap, and micro cap. An often overlooked segment of the market, small and mid caps have been outperformers for investors willing to look beyond big names and tap into the next generation of market leaders. I'm pleased to be joined today by portfolio manager Shilpa Mehra, who is making her Fidelity Connects debut to discuss her investment philosophy, her strategy, and the case for mid caps. Shilpa, welcome to the show.
Thank you, Glenn. Great to be here.
Nice to see you for your debut. Just a quick reminder to the audience about the fund that's launching today. It's 50% mid cap, which is your responsibility. The remaining 50% is going to be dispersed amongst some portfolio managers who have been seen before: Solemn Hart, Jed Weiss, and also Patrick Drouot. So we're going to talk about your component, 50% mid cap, as it is your debut. So it's great to have you here. I wanted to just ask this. You went to Columbia for your MBA. Prior to that, you were at NYU. What caused you to go the direction of the financial industry?
Yeah, it's a great question, Glenn. So actually, when I was very young, my dad, he's an investor. And so a lot of our dinner table conversations when I was growing up revolved around investing. And he always talked about how owning a share of a business is really you own a piece of the company. It's not just a piece of the stock. It's you're owning a piece of the company. And so these kinds of conversations really had kind of an impact on me. I had a paper portfolio when I was very young, and that really piqued my interest in finance overall. And so I went to NYU, majored in finance, started my career in venture capital. I worked at Bessemer Venture Partners for a couple years, and then I moved on to work at a couple startup companies. But I decided I really wanted to kind of get into the public investing arena. I just thought, there's a lot of information, and if you can analyze it effectively and appropriately and really figure out kind of key drivers and what matters, I thought the public markets had just a ton of opportunity. And so I decided to go back to Columbia Business School, where I majored in finance again and decided to, transition into the investing world. I graduated in 2009, went through the whole value investing program at Columbia, and it was an amazing experience. And I got to intern between my first and second year at Fidelity, which was just a phenomenal experience. And then, of course, I came back full time.
So in 2008 is when you got your first experience with Fidelity, and then in 2009, as you said, when you graduated, as all portfolio managers do, they start as research analysts and work through a number of sectors before becoming a diversified portfolio manager such as yourself. What was your journey like at that point when you started as a research analyst?
Yeah, of course. So my internship was in generic pharmaceuticals, so that was a really interesting and fun space. When I started full time, I started out in the industrials world, covering business services, which was really kind of a very hodgepodge of companies. I covered companies from like prisons to satellite imagery to kind of Xerox. So it was really a very eclectic group of companies. And so while it was, difficult to ramp at that time, what it forced me to do was quickly understand key drivers of the stock, what matters, and try to get an edge on that kind of industry and company, and then rinse and repeat as I moved over to the next set of companies. And so that really started to develop a muscle for me of just getting into an industry and understanding what matters and then focusing in on those key points. So I did that for about 2.5 years, and then I rotated over to financials, and there I covered consumer finance companies. So these were lenders such as American Express, student lenders such as Sallie Mae, and then on the other side I covered fintech companies like Visa, MasterCard, PayPal. And so again, very eclectic group of companies, very different drivers across all of the businesses, very different cycles. And so that kind of discipline and muscle that I had developed of understanding what matters for an industry and then ultimately the company, and going deep into those key drivers and getting an edge and picking the right stocks and avoiding really kind of subgroups that were not positioned correctly. That became kind of a regular habit. And at that time, I also started managing one of our select consumer finance funds. And that's really kind of when I began to understand more, thoroughly that I was a growth investor. I was more comfortable paying a little bit higher of a multiple for that visibility and durability of growth versus kind of paying a cheap multiple and then having, the earnings and the, revenues kind of go down over a period of time. And so I became more and more, sure that I was a growth investor at that time. And that's after that, in 2018, I picked up the Trend Fund, which is a large cap growth fund.
I've got to unpack some of what you just talked about. I love the story from being a research analyst, from satellite companies to prisons to fintech and all points in between. That's exactly what Fidelity's goal is, isn't it? To have such a wide variety of learnings. I'm curious about style. As you said, you found you were more of a growth manager, and I'll bet when you were at Columbia, you were focused a bit more on value. What made that shift in your mind?
Yes, absolutely. I mentioned I went through the value investing program at Columbia, and so when I first started in the industrials coverage, I was, excited about a company that was, trading at a 12% free cash flow yield, and the revenues were, I had to figure out were they going to decline 3% or 4%. But I quickly realized that that was a really difficult thing to do, and a lot of times, companies that are kind of structurally challenged, they remain structurally challenged, and it's very hard to find those inflections. And so at that early stage, I started to realize, hey, I'd rather actually, pay a little bit more for that visibility of the growth. And if the top line growth, comes through over the next several years, a lot of these higher quality businesses have a lot of operating leverage. So that revenue growth flows down to the bottom line. They generate a lot of free cash flow and can do a lot of M&A, share buyback. And so you can really kind of project out very strong earnings growth over the next few years by investing in some of these higher quality growthier businesses. And so it was a process. I think these things, they definitely don't happen overnight, and it takes many years. It takes, many mistakes, many successes, and to really understand kind of yourself and what, will allow you to sleep well at night, because ultimately, you do own a piece of the company, and you have to be, comfortable when the stock is down 20% that you're, if the thesis hasn't changed, you're going to be there to buy more. So it's really important to kind of, I think, know who you are as an investor in that journey. It was many years long, but now I'm firmly a growth investor, and I love finding, hidden growth gems out there.
You talked earlier, Shilpa, about, I think it was 2018, picking up Trend Fund. You said that very nonchalantly, but it made me think when I was doing some research on you, that's a familiar name. And upon more research, recalled that it was introduced in 1958, and Ned Johnson actually ran that for, I think, 9 years. It was his first fund. That's awesome that you're running Trend now. What does that mean to you that the fund's got such a great legacy?
Yeah, it's very, humbling to manage the Trend Fund. It is kind of a iconic, original fund at Fidelity, and it's a really fascinating fund too. It's a large cap growth fund, and so it's, very heavily weighted towards companies like, Google, Meta, Tesla, a lot of these big mega cap growth companies. And so I've loved managing this fund over the last 6 or 7 years. And part of the reason why I think, I was chosen for this to run the Fidelity Mid Cap Fund last year was because I always kind of skewed a little bit down cap in the large cap growth fund. And, I think there's just a lot of companies that are, not that well covered, that are misunderstood. Mid cap companies often have very kind of like stronger growth trajectories because they're just smaller, and they're more nimble. And so a lot of the alpha generated in the trend fund was actually derived by investing in a lot of mid cap companies. And so I think that transition over to this fund was kind of very natural.
That's interesting. So trend was always, I didn't know that, it was always large cap, and you've actually transitioned it to more mid cap because of the opportunities there. And I'm assuming because of the opportunities that are presented to you, there must be a tremendous amount of research that's done from your associates at Fidelity in the mid cap arena, and that's probably not the case amongst competition. Is that true?
Yeah, I think we have a very, very strong mid cap coverage and focus, and it comes really from a couple of directions. Our core analyst team, who are covering a lot of the large cap companies, they also have a very heavy coverage of mid cap. So, if you think of an industry, from like a commercial aerospace, you have Boeing, but then there's a lot of smaller mid-sized companies that are all in that whole supply chain. And so our analysts are really experts, and they cover the entire kind of ecosystem, and are very well positioned to identify the mid caps and the small caps that are, potentially huge opportunities over the next several years. And then the other side of that is, we have an entire dedicated small cap team here at Fidelity. And there's a lot of kind of similar growthier minded folks on that team. And so I actually work very closely with them too, because they are basically, the small caps are feeding into, the mid cap funds over time. A lot of those ideas are coming into my fund. And so I can get an early look into a lot of the top, business models, top companies that are coming through the pipeline at an early stage, and not have to wait till they actually enter my benchmark. And, it just creates just a whole, bunch of ideas and idea generation that you're doing with, like-minded investors, which is really
You're no doubt a huge contributor to that team that you're talking about, that mid-cap team. But Will Danoff is part of that group as well, so you see him quite a bit, and I'm sure speak with him a lot. What have you learned from Will?
Yeah, I mean, I have learned, Will, he's been around for, my entire career at Fidelity, and he's been kind of huge inspiration. I think, he just shows up. He shows up all the time, and when you're trying to find ideas and generate alpha for shareholders, you got to show up, and you got to be kind of into it, excited. And, he's been doing this for way longer than I have and has a ton of energy, but it's just so amazing to see that passion, and that drive. And I think, I really kind of feel the same way as him. I feel like very excited when I'm, meeting with a company and I'm trying to assess it, and, sitting in face to face with the CEO or in the CFO. And I think it's just, you just got to keep showing up to different ideas and companies, and keep an open mind, and work hard. And the markets, I think what I've learned from him is the markets keep changing, and you got to keep evolving. And that means you can't, kind of rest on your laurels. You got to keep changing and evolving your process in a way that's, not stagnant. So
The markets keep changing indeed.
Hello, investors. We'll be back to the show in just a moment. I wanted to share that here at Fidelity, we value your opinion. Please take a few minutes to help us shape the future of Fidelity Connects podcasts. Complete our listener survey by visiting fidelity.ca/survey, and you could win one of our branded tumblers. Periodic draws ending by March 30th, 2026. And don't forget to listen to Fidelity Connects, The Upside, and French Dialogue Fidelity podcasts, available on Apple, Spotify, YouTube, or wherever else you get your podcasts. Now back to today's show.
Let's talk about the need for active management in the mid-cap space in particular. There must be lots of areas of potential danger, areas to avoid. And active management allows you to zone in on, I guess, the key areas. Can you talk about the importance of active management with this capitalization?
Yeah, I think, with mid-cap companies, um, you do have to spend a lot of time to understand, the business, the competitive landscape, the strategy, the management team, the people working, the culture, the kind of incentive system, because a lot of these companies, if you have a good culture and a great product at these mid cap companies, it develops kind of a flywheel of success over time. And so I think the companies that, if you can kind of do that level of diligence, and it's not just talking to the company, it's understanding, the industry, what's happening in the industry, where are we in the cycle, is the industry getting better, is it getting worse, who are the competitors, what does the kind of secular growth rates look like, and it really means, doing a lot of primary research. And that, I think, is really what helps to build the conviction in these names, because when you find a really cool mid-cap company, that's could be a large cap company over the next several years, you want to make that a big bet. And in order to do that, you have to have really high conviction that, their positioning in the market is going to be better 3 to 5 years from now. And by talking to people in the entire, supply chain ecosystem, competitors, customers, that those are the kind of things that gives that kind of conviction.
Well, that helps us get to some risk controls that you put into place. And as a self-proclaimed mountain climber, which I'm sure you do with safety all around you, I'll add to what you just talked about from a risk control standpoint, and maybe I'll ask, what do you look for, what do you avoid when you see in a company to put in the portfolio?
Yeah, and that's, a really important point of what do I look for that I actually avoid. And, competition is a big focus area for me. And I think, when you're a successful company that's growing with high returns, it is just inevitable and natural that that will attract competition. And so the competitive moats that surround your business, your ability to continue to differentiate yourself in a way that's unique, matters even more when you're in these growing kind of high return environments. And so for me, if there are cracks arising in the competitive landscape, if suddenly there was a two-player market, now it looks like there's a new entrant that's gotten in via new technology, via a new service, via a new kind of way, those, obviously each case has to be assessed, but that's a concerning thing for me, because I think competition can really ruin the economics of the business over time.
Maybe I'll just give an overview of the fund as it's launching today, the Global Small Mid Cap Equity Fund. I think we've got a visual. Shilpa will be 50% mid cap US focus. Jed Weiss and Patrick Drouat will be international small cap. And then Solemn Hart is global micro cap. Shilpa, 50% in the mid cap structure. How many equities do you expect to have within your portfolio?
I think likely around kind of 100 to 150 or so. I tend to, run relatively more concentrated than others. I believe in kind of, really making active bets, developing conviction in ideas, and then making them kind of larger positions versus holding like a whole bunch of names. So I would expect kind of around 100 to 150 or so.
I'd love to ask you about your sell discipline, because you can go upstairs from where you are right now on the 14th floor and see companies anytime you want. You can go out and see companies, you're going to conferences. There must be indicators that make you think, I don't want to hold this any longer. What kind of a sell discipline do you have?
Yeah, there's kind of, it's always, an art versus a science. I mean, sometimes the thesis does break down, and, you have to kind of act and be honest with yourself that things have changed. Sometimes there can be, trimming that could be associated with higher, valuations as the stock becomes more and more expensive, as a risk control, taking some, chips off the table. It also depends on kind of alternatives. Am I finding, better ideas that I think have more potential? And that could be a reason to sell as well. But, usually if, I like to see companies and industries that are on a glide path of improvement. So that could be, cyclically improving, but it also could be just structurally improving because they're, expanding into new areas, new geographies, new products. And so they're on a kind of glide path of improvement. And that's really what helps me get comfortable with paying kind of sometimes higher valuation multiples for these growth companies. If they are on this glide path of improvement, then I feel more comfortable that they will be able to maintain that valuation. So sometimes if, that glide path is not going to be improving at the pace that I anticipated or expected, or, things change obviously in the market, the macro environment. So you have to continue to evaluate, that trajectory.
This portfolio's mix of mid-cap, small-cap, and micro-cap will no doubt be a wonderful diversifier for a large-cap portfolio, which is generally quite widely owned by investors and advisors. Can you comment on the need for diversification and where this fits?
Yeah, I think, I think this strategy is really, ultimately to generate alpha in the market. You have to I think you have a better shot if you're looking at companies that are, not covered by a whole bunch of people, that aren't being looked at all the time, that do have these kind of more pure play businesses that if you pick the right business and the right industry, they can do really, really well. Whereas sometimes some of these segments in a larger company can get lost. And I think what's really great about mid caps is they are more established businesses, as well. So they're not like kind of new models that we don't really, know or understand. And so I think there's so much kind of hunting to do in the mid cap space, so much alpha to be, to be generated, that if you can really pick the right stocks, I think the alpha generation can be like great.
Hunting's a great word that you just used, and can you talk to us about, as we head towards 2026, if you can believe it, what areas, although you're a stock-by-stock investor, there must be some themes that start to crop up from aggregation of some of the names that you've been selecting. What sort of blocks or themes are you looking at as we head into 2026 that we should be aware of?
Yeah, I think, one of the big themes that I think will, probably continue is the picks and shovels behind kind of AI, right? So, I mean, massive investment going into AI, and to broaden it out, it's not just AI. There's onshoring happening as well. That's actually driving a lot of demand for construction work, for electrical and mechanical work across the country. Really, there's so much, development when we're building these data centers or semiconductor fabs or, manufacturing facilities. You need kind of, shovels in the ground and electrical things happening, water, power. So for me, a big theme behind all of this, it's a little bit more unclear who the winners and losers of AI are exactly going to be today. But what I think is more clear is that there's a lot of kind of picks and shovels companies that are going to do really well. And a lot of these companies, they used to be a little bit more commoditized. So they're actually, this new environment is really great for them because they're able to pick the projects they want to work on. And so that means better pricing, better margins. So it can really be kind of a win-win. Another theme that that I've been kind of invested in is commercial aerospace. Post-COVID, airline traffic obviously disappeared. There was a lot of supply chain issues. And so when you're replacing, the replacement of parts on an airplane became more and more critical to do. You had to, get a new seatbelt fastener, et cetera. And so I think that has driven a lot of aerospace companies who are providing these, widgets and parts to be able to have better pricing, stronger demand, and a lot of them, as Boeing and Airbus, as OE production comes back, there can be a lot of kind of new plane demand coming through as well. So I think those are a couple of the themes that I'm thinking about.
That makes a lot of sense. And Shilpa, we've hit time, and I just want to say it was wonderful to speak with you today. Congratulations to you, to Jed, to Patrick, and to Solemn on the launch today. And again, wonderful to speak with you, and we hope you have a great day.
Thank you so much, Glenn. It's great to chat with you.
Thanks for watching or listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on YouTube, LinkedIn, and Instagram. We'll end today's show with a short disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again. We'll see you next time.